Hello everyone, I am Shivangni. Welcome to this session on options trading. Options are financial contracts that give you the right, but not the obligation, to buy or sell an asset at a specific price, within a specific time. There are two main types of options. Call options, they give you the right to buy. Put options, they give you the right to sell. Think of it this way. A call option is like booking a movie ticket in advance. You reserve your seat today, even if the ticket price goes up tomorrow. A put option is like having insurance. You protect yourself in case the value goes down. Options are powerful because they allow traders to manage risk, speculate on price moves, or generate income, open interest, or OI. It shows how many option contracts are currently open in the market. High OI, more activity, stronger support or resistance levels. The Greeks. They measure how option prices change. Delta, how much option moves when the stock moves. Theta, time decay. Options lose value every day. Vega, impact of volatility. High volatility makes options expensive. Gamma, how fast delta itself changes. But with great power comes great responsibility. Here are a few things you should not do in options trading. Don't trade without a clear plan. Don't ignore risk management. Always set stop losses. Don't put all your money into a single trade. Diversify. Don't trade only on tips or emotions. Learn to analyze. Don't forget that options lose value over time. Instead, focus on discipline, practice, and systematic strategies. In this series, we will explore how to read an option chain, how premiums are calculated, what Greeks like delta and theta mean, and how to build systematic option strategies. So stay tuned, subscribe, and let's begin this journey of learning options. Trading the smart way. Closing text on screen. Learn options. Trade smart. Avoid mistakes.